Well, first, I'd like to acknowledge the shift. Capital has become more expensive over that 3-year period, although we're starting to see it moderate a little today. Liquidity is definitely more selective, and investors are prioritizing certainty over speculation. So this does require some strategy adjustments. For example, back to core markets. In Toronto, we're looking back into the core GTA, a much more liquid market. There's a preference for cash flowing assets, and ideally a cash flowing asset with development style of returns. And we do achieve that through some value add strategies. Thirdly, it's all about shorter duration projects. Recycling capital, proof of concept, it is a strategy adjustment that we focused on. For the capital structure itself, lowered leverage, conservative debt assumptions, and it's all about stress testing outcomes. You can't just create a pro forma for one scenario. The risk framework is definitely evolving. We underwrite to downside protection first and foremost. We need cash flow visibility, exit optionality, and what that does is really de-risk the deal. Finally, continuous reassessment of risk. A lot of people focus on risk when they're doing the initial underwriting, but it's really important to follow the project along, not only new construction, but any project along through the whole deal cycle. All of this leads to investor alignment, and investors are treated as long-term capital partners. And with our 80 years of experience, we strive for faster sellouts and much quicker lease-ups. It's all about transparency and all about alignment.
Mantella Corporation's multi-channel platform paired with a long-standing brokerage relationships provides real-time market intelligence across the leasing and sales side. On the leasing side, tenants are more focused on flexibility and operational efficiency. They want space that meets their needs now, but can adapt and grow in the future. On the industrial condominium sales side, buyers are more focused on control and operational efficiency. They want to lock in their value, gain long-term equity, and also have an efficient asset class. Now, we're seeing in today's market environment, the high rates, both groups are being more price sensitive and taking longer to make decisions. But with our up-to-date real-time market information, we can buy right, price right, and release inventory, all while protecting investors' capital.
We focus on the 4 key variables. The first one is strategy alignment at the asset level. So we target small bay industrial assets, a segment where the structural undersupply because of high replacement costs and also zoning constraints. And we focus on active asset appreciation through strategic capital improvements and hands-on lease management instead of buy and hope. Another one is unit level insight. We go beyond broker stats and headline numbers to understand the tenant and buyer mix, unit layout, and real comps, because layout, frontage, and zoning create significant differences even within the same market. And the third one is downside protection. We stress test everything under different exit scenarios. In this market, we believe downside protection is a key factor that differentiates players. We rather miss a deal than rely on aggressive performance. The fourth one is stakeholder alignment. Alignment with the stakeholders, including tenants, communities, and trusted partners, investors, create more predictable cash flows and generate better returns, and also leads to market opportunities. It compounds over time and will eventually show up in returns. So at the end of the day, it comes down to strategy alignment, unit level insight, downside protection, and stakeholder alignment.
First of all, I'd like to challenge the commodity narrative. Outcomes are driven by execution, not by asset class. The platform's capability and experience matters more in volatile markets, and we've seen markets today that are anything but predictable. Industrial assets often do look similar, but the platforms are not. And what differentiates the best in-class platform are 3 things: integration, communication, and transparency. Very, very important across platforms and amongst the team members. Number 2 is developing a deep market intelligence. It's about understanding the market, having relationships with brokers. And third, the ability to pivot strategies. You could enter a deal with a certain strategy, but it depends on what happens in the market and macro events, and you need to be able to constantly monitor what's happening in various deals in your strategy. So this really focuses on the organization, building teams that think like owners with institutional discipline and processes. The idea is that we act as fiduciaries to the capital that we're entrusted with. And entrepreneurial decision-making with a strong internal alignment. So our teams, such as our finance, sales and leasing, our investments team, they're all integrated in what they do. We are cycle-proofing our business and our investments by avoiding dependencies on a single exit strategy and investing in technology, data, and people, not just AI, but real objectives and real measurable outcomes. At Mantella Corporation, we have a long-term vision, sustainable growth over individual wins, repeatable performance for repeat investors. We have some great people and a culture of responsibility, accountability, satisfaction, and a sense of pride in everything that we do. In my mind, it's the hallmark to evolve and withstand the test of time.